Welcome to the first lesson of this course. In today's video, we'll be teaching you lesson number 1, which is going to be psychology. Now, this is going to be an in-depth tutorial of your mindset and your overall position in the markets and what you need to be doing within it. Let's just jump straight into it. So guys, to start off the video, I want to put a lot of emphasis into making you understand what your role is in the market. Who are you? What market have you joined? Why are you thinking you're going to get rich quick by making a simple trade for a long or a short position? Who is your opponent? Who are you playing against? Because if you don't already know, in order for you to be winning a trade and making money, someone has to lose. All right, that's a known fact in trading. So what makes you think you're smarter than people who've been in this industry for a lot more than you? Because a lot of people have got a lot of capital, and most likely the big players with a lot of capital, like $1 million plus, 10 million plus, will fuck you up. All right, so you need to understand what your role is in the market and how you can benefit from it. Now, I know a lot of people say this to a lot of people who are new in trading, but when someone told me this question to me, I just didn't think about it ever again. I was thinking like, what the fuck, what's this guy about, right? I was thinking like, I'm gonna go straight into the chart. I'm gonna look for some support areas, some trading breakouts bullshit, and I make a trade and make money. All right, fair enough. I did that, and then most of you guys did that too, right? You think you're smart, you go into a trade breakout, you get like 2 good trades in a row, whatever. But it's just not, it's not true, is it? And you know it's not true. That's not how it works. That is not how trading works. And I'm gonna guys talk about a very good thing to do in trading and very good skills to have actually, right? So your first skill is to know who you're playing against. And when you know who you're playing against, you'll make a lot of money, right? And I'll give you a quick clue. The person you're playing against is most likely yourself, all right? And I know it's very, very silly to actually be hearing, but because you're new to trading, and I know there's a lot of people who are watching me right now and probably are experienced already, which is very good, but these people know as well, all right? So when you trade and you're new, you are retail, you're making trades based off big players manipulations, right? So they most likely got you manipulated into a trade that you most likely don't even want to be in, just so it can favor them, okay? So when you know who you're playing against, even though they put you in positions that you don't want to be in, you will always understand that the people that you play against will be the retail. Because if you play with retail, you will lose like retail, and retail always loses no matter fucking what, okay? The people who win are the big players, all right? So your friend and your teammates in trading are going to be the big players and the manipulators and all that, okay? And number 2, the skill to have is to be understanding, to have a very high psychological intelligence, all right? And this is to be understanding where people will be making trades based off of certain areas, the support, resistance, who's going into that trade right there. Is it retail? Is it big players? This goes into knowing who your enemy is and what people are doing, what positions you're playing against. So having the psychological intelligence to know where people are making trades and how can you benefit from this, okay? So that's really the whole psychological part, because I know it's a very important thing to do, and I wish I knew this myself when I first started trading in my whole like 3 years of trading. And this right here, this image you see in the background is a simple just I don't know, like a chart to indicate your feelings, yeah? And because your feelings will make you enter trade based off what you feel, right? So this indicates your feelings based off a market. As you can see, when the market is very high and it's very up, you're in euphoria, right? You're thinking like, I'm so rich, I'm making a lot of money, this is so easy, I could do this for ages. Yeah, not for so long. And you will have most likely, if you watch this video, you probably already had that point in your time where you made a lot of money and it just kind of went down, and it made like a little bit of profit, and you kind of wasn't all pleased at the very overall outcome of that trade. And then at the very bottom, you have capitulation. This is where people are like, okay, I'm accepting my losses. I thought that we was going up only, and we're fucked. Okay, we're making no money, and I'm screwed. I was long, and I was in a lot of profit. I didn't take profit, and I added more to my position, and now I'm even more losses. All right, so understand where certain areas of this chart right here you want to be taking advantage in order to make your positions be more profitable than others. All right. So when you know people's psychological interference with the markets, you make a lot of money. That's my main point of the very start of the video. And this video will be very long, and it's most likely just so that you can understand as a new trader how you can win in this market. So let's jump straight into the charts and maybe show you some examples of something that I want to be showing you right now. Okay, so here we are on the Bitcoin chart within the daily time frame, and I want to be talking to you about something that the big players was doing here that they already knew and that you didn't know. Now, you might have not been trading to experience this right here, but put yourself in the position of where you would be trading here and you would make positions within this time frame. So I'm going to go back here, and I'm going to explain to you something that I found out myself only, not by anyone else. This is something that I knew, and this is what I sometimes look out for when I'm trading, because I tend to realize something isn't right here, and I want to figure out what the other big people are doing in the markets, and if I'm not maybe on the right side of the trade. So obviously we know the price went up already because I showed you, but right here, so I'm going to show you guys right now. You have one leg towards the downside, 2, 3, 4, 5. Overall, there's 5 waves towards the downside to create your whole area of accumulation. Okay, so let me show you as well a Wyckoff accumulation sheet, and this isn't really important, but it will give you an idea of where the market will be heading to and what big plays are doing, because when you don't know this is playing out, then it's playing out perfectly for them, right? Because you wouldn't want people knowing this is playing out, because then they would copy you, and then they would make a long position as well, and then the people who are already doing it wouldn't make money because no one's shorting. So for them to be able to make money, you need to be making a short position. So let's add this right now into the chart and show you how this played out. So as I mentioned, 5 waves to the downside. So we have 1, 2, 3, 4, 5, perfect. Now, obviously, when the first 5 waves happen, we wouldn't know that this is playing out, right? We would only know maybe around about this time, or maybe around about this time, which is where I found out about it, was this time right here. I notice the 3 tops, bottom right here, 1, 2, 3. We have 1 here, 2, and 3 right here. So I'm thinking like, right, well, the price has been in this whole range for about a month nearly, and we're consolidating above support, which is going to be kind of bearish, because the longer we are there, the more bearish we'll be. So a lot of people get bored and they're like, okay, also even the candlesticks, I'll show you now, guys. Okay, watch this. So the candlesticks right here are very fast. We have 2 daily candlesticks, and then we have 1, 2, 3, 4. I'm gonna count this as 5 because it's just neutral really. We have 1, 2, 3, 4, 5, 6, 7. We have for 7 days continuous down only. Okay, a lot of people, you have to think right here psychologically. What the guys mentioned you at the very start of the video, I said, think of right now what people are going to be thinking with the price action that's happening within them 7 days of a full week. Guys are trading full week, and they want to be making trades, and the only making trades are short positions. So this is creating a lot of short interest for people in the market, right? So right here, they're getting very bearish. and then the price goes up. So they're thinking, okay, bottoms maybe in and make a long position right now. Perfect. CPI report comes in, okay, this day right here. Oh no, it wasn't. It's coming right now. Okay, so CPI report comes in after this, but let me guys show you right now about something that happens here. The price goes up, okay, and it goes down as well, but the price goes up. So when they give the opportunity, they're like, okay, I've got a higher opportunity now to make a short position at a higher price and make more money from the market. So a lot of people right now make short positions, and as you can see, all this wick right here is most likely retail. That's most likely retail making short positions because they are looking to be making a short to a new lower. So they are basically bearish at support. And then what happens here is we have the CPI come in, and boom, we have the liquidation right here at the very bottom. And what they talk about on the Wyckoff, we have 1, 2, 3. We have 3 touches at the very bottom on the third spring right here. Let's play a little bit right here and then we'll see what happens. Boom, boom, boom. So why is the price going up when both of the traders was short favored? Well, they're kind of like now trapped, and it kind of sucks for them, right? They're stuck with a short position at the very bottom, and they're not in a trade for a long position where they want to be doing for the right moment of time, right? So we also have 1, 2, 3, and we have 1, 2, 3. This isn't as very clear, but it doesn't have to be. It doesn't have to be at all. We still know that at this point in time we have a black candle, which is obviously a bearish candle, and this is most likely a dip for the price, and this could be a third bottom top. And now let's keep going now. Boom. All these people here with the low volume got stuck because if you don't already know, a lot of people here who was trading here, there was very, very low volume, and people got scared as well. Let me tell you right now. The Bitcoin price wasn't moving at all, and I remember actually back then the price was moving like $50 only for an hour. And a lot of people, what they would do is they would make high leverage trades in order to make money like they normally would do with normal trade movements. So because they're using higher leverage, they've got more anxiety within them, and they're more stress because they need to manage their risks and all trades overall better than they normally would do. So they're overstressing their trades. So when there is low volume, most people probably wouldn't even enter these trades because they're very scared, right? So if they're scared, big players will take advantage of you, and they will accumulate all this price to where they want to be accumulating it to, and just put a price in that price direction, right? And then that's just you. Well, you wouldn't even make a long position right there, and I know you wouldn't. Okay, so this goes into the psychology of trading, right? Even though it looks like a normal chart, you have to understand why some points of the chart are the way that they are. Okay. Anyways, at 19.2k in the Discord, we mentioned to you I'm aiming for 21.5k, and we are long on Ethereum. We longed Ethereum first, and that was crazy. But let's jump straight into the overall Wyckoff and this complete right now. Okay, so the spring takes place. We have a little bit of a dip right here, which is this. The dip takes place, and then we go up a little bit higher, just like that. I think that was the top. And if we look at the Wyckoff, we have the very top. So the spring is here, a little bit of resistance, and the pattern here that plays out is 1, 2, 3, 4, 5. Okay, with a double top here. And what happens here is a double top and a double top, right? The price goes above that, and this is where it lines up with the first wave bottom. The first wave that we mentioned earlier was right here. It's a very big wave because it pushes into a very low price on Bitcoin. And this is that fifth wave consolidation area where you want to be shorting if the price goes there in the future. So overall, this whole box, it comes into that price, and a lot of people, well, the big players are shorting here, but people like you are bullish here. And do you want to know why? I'm going to show you right now exactly why you are bullish here. 4 hour time frame right here. This is the biggest fucking scandal you will ever see in trading, and I don't understand why a lot of people are bullish in this scenario here. We mentioned to you guys in the Discord server, 21.2k, you want to be shorting this shit, and holy fuck, I'm going to show you guys now something very insane, right? So right here, people who are noobs, they normally are breakout traders, right? They are seeing momentum from one side of the market, and they're saying, okay, there's resistance right here, and I want to be making a long position when that resistance is broken and showing me strength towards one direction in the market. Cool, right? Right here, we have a resistance of here. That's your main resistance, okay? Delete these two right here. That's overall your main resistance on that black line, right? So when the price on the 4-hour time frame, which is quite significant and it's a very popular time frame as well, the price closes above that, you know that people in retail will be long in that shit, all right? And there'll be even more long in it when the price comes back to retest it here, so they will add to their positions right there, right? So understand right now, right, that sorry about that. So understand that right now, when the price was here, you wanted to short, or they wanted to short, okay, at this point in time. But now, because the price is above that point, you will now make long positions at this exact price, all right? Just because this price is above there, right? So let's play around now and see what happens. Oh, okay. Well, it's all right. It's a little bit down only, all right? I'm guessing for you, that's what you're hoping, right? Because you're in a long trade now. Because what you did is you bought right here. And you see right here, the price actually did bounce a little bit. And that's good. They need to do that in order for you to think that it's a good trade. Because if it doesn't bounce, you most likely quit your trade. So when you enter a long right there, you are good to go. That is the liquidity for big players. Okay? So they shorted here, and they manipulate the price to push up a little bit more on a higher level and then re-enter, so you make a long position like that, okay? There's a lot of trades here on retail, and you won't even understand that if you just look at the chart normally, okay? So what happens now, right? What happens now that you are in that trade? Where would the retail want to push the price to in the next liquidity zone? Well, let me show you now on what I would do in this scenario. So what is your range? Your range is here and here. This is your whole range. These two boxes is your actual price of Bitcoin, right? So now that we're in here, we most likely want to be targeting the 0.5, which is going to be, if I do the ruler, here to here, and make a line, you want to be targeting the 0.5, which is a halfway to your range. And then your biggest target was your ideal target is this one here, right? Collect every single long liquidation on these levels. You see right here, guys, these candlesticks, these are people making long positions with their stop losses probably just on these wicks because the price is so high up now. They're so confident their TP's hit, they are break even now. So whenever you go back to that same price and you collect them liquidations, you are making them people lose money because they are no longer in the markets for that trade, okay? So if we keep playing them right now and see what happens, we'll know what we need to do right now. Boom, boom. Holy smokes. Would you look at that? Price just suddenly goes so down so fast. That's a bit weird because right here, this price action is a little bit more stable. It's a little bit more normal. Why is this going down faster? And I'll explain to you why it is, but let's keep playing right now. Oh my God, would you look at that? That is crazy stuff. Anyways, why is the price going down so fast right now? Some little trades right there, you know, so you saw that. So why is the price going down so fast right there? It's because this is the 4-hour chart, so this is only 1, 2, 3. This is like a half a day. Within a half a day, price goes down like 2k in Bitcoin price. That's fucking huge. And the reason that the price goes down so fast is because people who are in trades, they will not have time to risk manage, okay? When people are sleeping, and most likely most of the volume comes in is from USA, right? When USA and London clash, that's where the most of the volume comes in from trading. And when are they asleep? They're asleep through Asia session. And I'll have you guess what? This happened exactly at Asia session, okay? Asia session happened and no one can risk man their trades. And look at this. This whole price got down to this level and they got liquidated. They woke up to some fucking bullshit because they're just not in the trades anymore. It's crazy, mate. And also, the funny thing is, people will be long in here, like me. And I think that's a normal reason to long right there. But this is manipulation to the fucking max. They manipulated it so hard that the price went down to the impulse start, which is what I targeted here, okay? And I'm going to do this for now. So people who wanted to long here, there is even more liquidity in the market for people who are longing to make their trades for long here and push them even lower to make them close. So they are losing money. Retail are literally long in there and losing more money even from doing fucking nothing. Now that's the level you would long right there, right? That's normal. Let's keep going now and see what happens, guys. So here we go. Now, as you can see, that line actually gets hit. And this is where I was longing today. I was making this video for a long position and I wanted to make a trade for a long. Obviously, this didn't get hit on that day. And I was like, okay, cool, whatever. I'm not going to go in a long position. And it hit here. And as you can see, if you go here, boom. The price went all the way back up to this level here. And it retraced back down even lower. And then we went to this zone here, which I'll talk about right now. And why went to this zone. So it shows you that there's going to be a load of interest with the price going back up that people will make new long positions. They're thinking like, I'm so bullish now that we had a little bit of a dip and the price is going back up. Next time it goes back down, I'll buy a little bit and make a new long position. Thank you very much because you provided liquidity for the markets and now the price went even lower to about 17.1k, right? And you're fucking bamboozled and you are not in the market anymore because you're probably most likely liquidated. GG's in the chart. Anyways, so why did this whole move happen? Why was it so successful? Why is it so good? Well, it's so good because we know that this is a Wyckoff distribution. Now, I talked about the Wyckoff accumulation and it topping out here, which made perfect sense, all right? Let's show you guys the Wyckoff distribution. And I know this video was going to be long for you guys, but the more you understand the whole concept of where price needs to go for the market, you will know where you don't need to be into trades and why it's just unnecessary for it. And always be thinking, oh, I need to be in a long position. No, you don't. Just watch, all right? So Wyckoff distribution. This is the one that happened today. Let's invite it to the chart. Paste it right there. And as you can see, what can we see, ladies and gentlemen? All right, we can see a double tap right here. And this is a double tap. This is your LPSY with, in fact, it's this one here. Sorry about that. This one's a little bit higher. I don't know why it is, but it is, and it fits perfectly. And we have the consolidation above support. So you guys know right here on the UTAD test that when price consolidates, you'll be making a long position, like I mentioned, right here. When the price retraces and it goes back up a little bit, you'll be more satisfied with the trade. But no, this is where they take advantage of that. And all this time of that downfall, there was collecting short positions. And as you can see, it goes down to phase E of the very start of the leg run up. The very start leg run up is actually here, but obviously we had news like FTX being bought by Binance, which even made it even lower, which is good. And overall, as you can see, it plays to perfection, really. 1, 2, 3, 3 tap with a nice sort of distribution zone and etc. And I knew about this distribution since this level here. I longed at 20.1k and I targeted this zone here. I closed my long and started scaling for short positions, right? Now, let's talk about why did we go to this zone, right? And you'll understand now from a shorter's perspective, where do you take profits and where do you go long? Because we went long today and it actually will indicate to you how you can make a long just like me in the same scenario and make profit. So let's go on to the daily time frame. If I go to the weekly, on the weekly, we have a monthly low on the December of 17.5k. Okay, so I officially had this level marked all the way here, And actually the price at the very start of the dump on Bitcoin didn't even touch that level, right? We didn't actually touch that level. And right here we did. So I'm looking at that level right now. When the price goes down, I want to be buying Bitcoin and looking for a reaction within Bitcoin. So it's going on to the daily time frame. And now we all know right here that all this accumulation has long positions filled all here. These are all long positions with stop losses within these little wick zones. Like people like you, if you was long here and you think Bitcoin bottom is in, your stop loss is probably like here, right? You can agree as well, right? It's here or maybe here, or even probably here. And guess what? They ran through every single stop loss that people had, and they collected it, and now the price is back up to that same level of that accumulation. So you can see that you are no longer in your trade, right? You've been stopped out, and plus the price is now higher than your entry, or I should say stop loss, right? Which makes no fucking sense. And why is this the logic? Well, you have to understand, they need the liquidity of you, because now everyone who's long, they're done for, they're out. Now they're accumulating. So 17.5k, I'm looking to long. I actually longed a little bit underneath that. I started to see strength, and we'll talk about strength in a bit with Excel charts, and explain to you guys more detailed stuff which you need to know in order to be skilled and advanced in trading. So I think that's overall done for with market fuck ups, and to make you understand certain areas with certain psychologically important parts of the market where price does need to be dropped down, and why some patterns play out, and where they can maximize the timing of the news like FTX, etc. That was perfect timing, right? It's all manipulated. It's all easy, right? Anyways, let's jump into